Today in the markets, we got bank earnings with elevated loan losses. We got hotels defaulting on loans. We got Best Buy reporting earnings, and the United States housing market is heating up. The S&P 500 hit a new peak today, up 0.36%. It was led by the communication services sector, while we saw losses in the energy and utility sector. The Nasdaq continues its strong gains, up 0.76% on the day, making its year-to-date gain almost 28%. In the Canadian markets, the S&P TSX was flat. In Europe, the FTSE was down over 1%. In Asia, the Nikkei was up over 1%. Oil was up on the day with WTI trading at 43.34. Gold was down on the day and continues to fall, is at 19.35. Looking at Treasury yields, we're seeing an increase in the yields at the farther end of the range, with the US 10-year rising up about 3 basis points on the day. It's currently at 69 basis points, while the Canadian 10-year is at 60. In the currency markets, the winners were the British pound and the Australian dollar, while the losers were the US dollar and the Japanese yen. The Bank of Nova Scotia reported their earnings today, with net income being $1.3 billion, down from $1.98 billion in the previous year. They had an earnings per share of $1.04, which is down from $1.50. On an adjusted basis, the earnings per share were $1.04, down from $1.88, and missed earnings estimates of $1.11. The revenue actually was up, surprisingly, up to $7.73 billion from $7.66 billion. The big number, though, to focus on is the provision for credit losses. As you'd expect during a recession, that we'd see a sharp spike in the provision for credit losses, and that is exactly what we saw. They had a total provision for credit loss of $2.18 billion, which is up from $713 million the previous year. That is a really big increase in the credit losses that they expect to have. And just to take into account, it could end up being even higher. This is the second quarter we've seen the banks have to increase that provision for credit loss, and I wonder how many quarters in a row we'll see these high levels of provision for credit loss. It should be noted that Scotiabank does have a large portion of international exposure, as they have a lot of exposure in South America, in particular Latin America, and that's what really hurt them this quarter, as their international banking actually had a loss of $28 million compared with a profit of $844 million a year ago. Canadian banking took a hit too, but they still had net income of over $400 million, which is down from over $900 million the previous year. You'll notice too with some banks are actually doing pretty well in the capital markets and wealth management area, as those businesses have done particularly well, especially with everything that's going on. There's a lot of business, a lot of companies taking loans and things like that that have been driving business, as their wealth management actually saw an increase. They achieved earnings of $324 million, up from $306, and their capital markets was at $600 million, up from $374. The Bank of Montreal also posted their earnings, and they actually had a really good quarter, all things considered, with their shares up 6% today so far. Taking a dive into how they did, their earnings were $1.23 billion, which is down from $1.56 the previous year. They had earnings per share of $1.81, which is down from $2.34. On an adjusted basis, it was $1.85, down from $2.38, but it beat analyst expectations of $1.71. The revenue also saw an increase, just like Scotiabank, and was up to $7.19 billion from $6.67 billion. The provision for credit loss also saw a pretty big jump, as it reached $1.05 billion, up from $306 million. Though it should be noted, it says here, it is down from the previous quarter, which came in at $1.11 billion. That's a good sign for them that possibly their PCL has spiked, and that we'll see a decrease in the coming quarters. But a lot of that is unknown, as we really don't know how long the shutdown will happen, as well as if we'll see another shutdown in a certain part, maybe later this year or even into next year. Their wealth management also performed very well, just like Scotiabank, as well as their capital markets, with their wealth management up 37% and their capital markets business up 36%. It's an interesting quarter to look at the banks, as you'll see a lot of the effects that are happening on the economy because those banks are quite tied to the economic performance of the areas that they're operating in. I thought this article was pretty interesting, especially when you compare it against the performance of the Canadian banks that happened today. So what this is talking about is essentially how US banks have been performing in the second quarter. And it says that the FDIC said today that US banking industry has seen profits down 70% from a year ago. That means that their profits are at 18.8 billion for the quarter compared with 62.5 billion the same period a year ago. That's a really big drop, especially when you compare it to the Canadian bank's quarterly results, as you didn't quite see that big of a drop. You did see a drop, but not even close to 70%. Just kind of shows you the difference of the industries and how they operate. But at the same time, it also you could put into question maybe the Canadian banks could see a hit coming into the future, or you might even see from earnings that from Canadian banks that have more exposure to the US, like TD, that might take a bigger hit in their profits for the quarter. With the discussion on the increase in provision for credit losses banks have, it's important to think about where the big areas that are driving those loan losses, who isn't paying for their mortgages, their loans that are causing this, as it shows you really what areas are struggling and could predict what's going to happen in the future. This article is pretty interesting, just talks about how hotels have really struggled. And it shows here that 23.4% of the commercial mortgage-backed security loans, which finance many hotels, were more than 30 days late in July. It's a pretty high number. It says it totals 20.6 billion. Its comparable number from the previous year was 1.34%. Hotels have really struggled because really, who the hell is going to a hotel right now, as it really isn't a good option. It's estimated that hotels have lost 46 billion in revenue from rooms since February in the United States. These aren't the only places that are seeing high defaults and late payments on their loans. As it also says here, the retail industry is also struggling, which is it's at 16.1%. It's not quite as high, but it's still quite a high number. And I should just watch out that in the coming months, especially when stimulus packages start to end, start to drop off, and things, spending like that goes away, as well as evictions, more defaults and bankruptcies start happening, you might want to see where actually happens for these hotels and these loan losses. Best Buy also reported their earnings today, and the market didn't like them too much, with their shares down over 4% currently. But looking at their earnings, it doesn't look quite too bad, as their US comparable store sales were actually up 5%. Their revenue was 9.91 billion, up from 9.54 billion. Their earnings per share actually had a strong beat of earnings estimates of $1.71, beat an estimate of $1.09. A large portion of this increase in revenue and earnings came from online sales, which increased over 200%. It said that half their US revenue it came from online business, which is insane considering that previously in the last year it was at 16%. With these results, though, you might be wondering why the markets haven't taken too well to the news, and that's because they haven't provided any more guidance to the future, as they have backed off that again, and they're saying that they expect the growth won't quite continue into the third quarter. I was also kind of expecting this, as I was saying before, as places like Walmart, Target, who had these really strong revenue growth, but when you consider the stimulus packages, the money people are getting, and that they don't have as many options to go to different places, with places being closed, that revenue isn't just necessarily going to keep increasing over the next quarters like you might normally suspect, and that they might just be an extra thing. If anything, just look at it as an adjustment for that quarter, as just kind of a gain. We got more news of a housing market heating up in the United States, with new home sales jumping 13.9% in July. That is the fastest pace of new home sales since 2006. When you consider that that was just before the Great Recession, where you saw that mortgage issues, everyone losing their houses and things like that, and everyone was buying in that time. It's pretty crazy that how much increase we've seen, especially when you consider the given situations. This comes off the bat of last week's report that I talked about of construction of new US homes up 22.6%. So you're seeing both those construction as well as sales continuing to increase, partially off the back of lowering interest rates. But at the same time, people are also trying to find bigger rooms to live in when people are spending more time at home and not so crammed in small apartments.